All right, Apple continuing to fall out. It's well into correction territory, down almost 14% from its highs. 20% gets it in a bear market. A lot of technology stocks, particularly within the NASDAQ, are already there. Amazon is a hurting puppy, too. Again, we're going to go into that and some of the nuances here, but stuff the markets would ignore. They're not ignoring right now. What does John Layfield make of that? He joins us safely ensconced in the money-making environment we call Bermuda. John, it's always good to have you. What is going on with these, these old chiefs for the markets that are now just getting shellacked?
I think it's a couple things, Neil. I think when you have increased volatility because of certain things like rising rate environment, geopolitical concerns, your stocks that have been your high flyers are the first ones that sell off. It's certainly the case in Amazon. It had a 70 forward multiple when it started selling off. It's now about a 60. As far as Apple, I think people are concerned about the supply chain issues, because if the tariffs go up to what the President Trump has talked about, this will significantly hurt Apple's supply chain and will raise the cost of products.
So I've always likened, and you and I have gotten into this before, John, that Apple is more or less like a technology, even / retail fund. That it's not just investing in a stock or a sector, but indicative of consumer appetite for pricey stuff, whatever you want to call it. And I'm wondering if this is overdone, because it's not as if the consumer is dead or the consumer is unwilling to pay for this stuff. And at 46, 47 million iPhones, whatever it was, they made more money on each phone than they ever had in the past, yet it is not resonating with investors. What do you think?
It's not resonating with investors. I think Apple is smart to take out the iPhone unit sales, because I think what they're looking at going forward is a service contract. You had about $10 billion last quarter of service, as far as your Apple Music, your streaming, all of your apps that you buy from Apple, all of your subscriptions. You had $37 billion in Apple iPhone sales. Going forward into 2020, just 2 years from now, that service part is going to be, according to Tim Cook, around $50 billion. You have a 5x increase in those services. That's where Apple makes its money going forward, as far as the service. And this quarter, Apple's supposed to come in around $93 billion at the high end. If they have a blowout quarter at Christmas, they could actually have the first $100 billion quarter in company history.
But don't you get a little jaded now if you know that Apple is not going to break out its sales and maybe only report them when they're really great, I guess? Then if they don't, then you're saying, aha, they're not great. I mean, that was the suspicion that was fueled early on. Remember with the Apple Watch, that they wouldn't break out numbers for the watch. They would say years later, oh, it's the best-selling watch on the planet, or whatever it was. Does it breed cynicism?
I think it does to some extent, yes. Steve Jobs is a once-in-a-lifetime innovator, and they have not innovated since Mr. Jobs has been gone. They've had incremental increases in all of their products, and they're doing incredible jobs of putting out new of the same products, new iterations, new models, but they're not innovating out there at all. And so you have to go to the service revenue. I think Apple ends up buying something like the NFL rights or the EPL rights or the NBA rights. I think they end up taking the streaming service to a complete different level. But as far as the unit sales, I think that is in the past, as far as Apple creating a complete new market like they did with the iPad.
What the heck, meanwhile, is going on with Amazon?
Amazon is, you got a Christmas coming up. He had 49% was projected for the cloud. It came in at 46%. Right. It's all about projections going forward. Amazon, to me, is going to be the most valuable company in the world in 5 years. I think right now they just have too high of a valuation. I think it's a pretty good buy right now. I think we're looking at a Christmas season with all the data points coming out right now, with low unemployment, wages going up, consumer confidence at an 18-year high, and consumer being 70% of GDP. I think we're going to have an absolute blowout Christmas season.
So you're not in that crowd that says their costs are going up. You mentioned the higher minimum wage. It took effect last week at $15 an hour, and the fact that they're now going to offer free shipping to even non-Prime members. I don't know how regular Prime members feel about that, but what do you think?
I think it was a terrific political move. 6 months ago, these guys were the pariah of the conservatives and the liberals. Right. They had the Bezos Act that was going after him for wages, and now he went to $15 an hour. Now the liberals love him. You had the conservatives who went after him and wanted to get extra taxes and extra charge from the USPS. President Trump's in a battle with Jeff Bezos. Then they come out and say, we're going to support our military and our DOD, unlike these other tech companies. Now they've actually hit a huge political home run, and everybody loves Jeff Bezos. I think it was a great political decision that Jeff Bezos made to do that.
All right, buddy. Thank you very, very much. Sorry, I lost track of time there. John Layfield in Bermuda, following all these developments here.